So that's the one big part. The second big part is that Cameco also, along with Orano, along with Kazatomprom, along with Navoy from Uzbekistan, the Chinese entities, these are the big players in uranium production. And the fact that Cameco is signing so much uranium into contracts already is kicking off the uranium term contracting cycle. And it's quickly showing that tier one production is being consumed into contracts.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident uranium expert, Justin Huhn from Uranium Insider. Justin, thanks for coming back on the show.
My pleasure. Yeah, always good to see you. How are you doing?
I am doing just fine, just fine. I'm heading down to Mexico here tomorrow. I'm super excited. Should be fun, and I'm looking forward to it. But we're here to talk about uranium. So, Justin, we have 4 funds, as I'm aware of right now, that are buying physical uranium off the market. We have SPUT at about 62 million pounds. We've got YellowCake at about 19. I'm rounding here. Looks like Zuri is probably going to pick up about 2 million pounds, and ANU has probably, according to John Quakes, about 1 million pounds. So that adds up to 84 million pounds, which is round about 40% of the annual demand. And we have a question from James McDonald. When Zuri starts purchasing, I believe the raise starts today, right? On Friday the 26th?
The deadline for subscription commitments is today. So it's going to take a little bit of time for funds to settle and things like that. I don't expect that they're going to be necessarily in the spot market, let's say on Monday, but it is possible. I'm kind of putting it out there sort of the end of next week, possibly into the following week is when I expect they probably do their first purchasing. But they also, the only public information they're putting out there is their daily NAV, which is going to be published on Bloomberg. So it's going to be much less transparent than the SPUT vehicle. They don't want any front running whatsoever, especially since they're going to be trading persistently at NAV. So they're not signaling to the market, hey, we raised this much money, or we're about to go buy this much. Like there's none of that. They're going to operate very quietly and professionally, just staying right at NAV. 100% of the time.
Okay. Well, I'm trying to front run this as I just bought more SPUT today. It's a 13 or 14% discount NAV as we talk. What do you see happening with the general market, with the spot market, with Zuri coming online?
It's really hard to predict because it like the other vehicles is going to be driven by capital flows. So obviously we're not in a period of robust market confidence, risk on type moves, with a few exceptions like Nvidia. It's hard to say what the capital flows are going to be like, but an understanding of how this vehicle is going to operate, I think that it's going to attract a more professional institutional investor. And so, if the capital's there, it's going to have a very significant impact, in my opinion, because of the way it's going to operate with them purchasing uranium for front month settlement. And we actually had a conversation with Bram van der Elst from Curzon Uranium, who's going to be the uranium trader for this vehicle. And, I just kind of posed a hypothetical situation. It's like, okay, let's say you guys hit your goal and raise 100 million, and you come into the market for 1.7 million pounds or whatever it is, at $54 a pound. And you don't get filled at that request at the current price. You guys go out on the curve to get filled, or you raise your bid. He's like, no, we raised the bid. And so there's not like this hard line, 30-day settlement. If they can get filled at 35 days at that price, they're going to do it. But if they have to go out 60 days, that's not happening. They're literally just going to raise their bid until they get filled. And he's confident that there's sufficient liquidity in the spot market at some price. It's not like we hit that price and then the liquidity just opens up. But, if he can't get filled at 1.7 million pounds, this is also, again, hypothetical, and they raise their bid from 54 to 54, 30, whatever it is right now, to 55, maybe they'll get a partial fill, 55.50, maybe they'll get a full fill. So it's, but they're basically committed to front month purchasing. So that's a unique element to this vehicle that no other vehicle, to my knowledge, currently has. So if there's significant capital flows coming in, then it's definitely we're going to see short settlement price discovery. What exactly is out there for 30-day settlement and at what price? But I have no predictions on how much capital they're going to raise. We have heard completely unsubstantiated rumors that they have had success with this first round and likely have exceeded their goal of 100 million. We'll have to see. I don't know. But yeah, it's going to have an effect of some kind, and how much of an effect will be entirely dictated by the capital flows.
Okay. All right. Jeffrey Spalding asks, hey, Steve, would love to hear Justin's thoughts on Australia's uranium mining sector. Thank you.
Australia has the largest uranium reserves on the planet. Second only, I think they have even more than Kazakhstan, if I recall correctly. Huge uranium reserves. They have no nuclear power whatsoever. They have some jurisdictions that are 100% banned uranium mining and some that are pro-uranium mining. So South Australia, Western Australia are supportive of uranium mining. And currently we have a few mines that are in operation. We have BHP's Olympic Dam, which is primarily a gold and copper mine, but they have stated within recent past that they plan to expand on their uranium production from that mine. And we're starting to hear this kind of generally from multiple producers. Cameco is talking about the potential of taking McArthur River from 18 to 24 million. Kazatomprom is shooting to go to minus 10% instead of minus 20% of their subsoil use agreements. BHP is talking about more uranium. Right now they produce maybe 7 or 8 million pounds a year from Olympic Dam. So they could ramp up probably a few million pounds from that with relative ease. Boss's Honeymoon is an ISR project in South Australia that they are moving towards initial production. Well, this is a brownfield. This is a previously producing mine. The previous operator, which was Uranium One, had a lot of problems with the geology and the chemical balance within that geology. But I think that their team has put a lot of effort into shoring up those, and they're looking at a ramp up over the course of 3 years to 2.5 million pounds a year. Let's see. ERA's project is still some production coming from there, primarily from tails. But generally speaking, those jurisdictions that are supportive of uranium mining. So it's certainly possible we'll see an expansion into more projects being developed in those jurisdictions in Australia. Like I said, they have the largest reserves on planet Earth. So if this tide that is shifting generally in the West towards supportive of nuclear and potentially supportive of more uranium mining, let's say in the United States, if that makes it to Australia, we could see a lot more production, but it's not happening, tomorrow. This is probably multiple years down the road when we see greenfield projects in Australia actually get into production, just like anywhere else, right?
Okay, so that's probably not going to affect this bull run.
No.
Okay, that's interesting. I thought that how do you say it? Athabasca Basin. Yeah, Athabasca Basin was the biggest.
It's a tongue twister, isn't it?
Yeah, I've listened to it 100 times. Can't say it. I thought that was the biggest. I guess not.
No.
Okay, from Wolfgang Wurst, our number one fan from Germany, says best regards from La La Land, gentlemen. Justin's assessment of the current risk reward profile at Kazatomprom. And then part 2, is there a bottleneck in the West in enrichment of uranium due to embargo against Russia? So Kazatomprom risk reward and embargo against Russia.
Well, I would argue the risk reward is pretty positive here currently for Kazatomprom, primarily because the stock has not done particularly well in recent past, although generally speaking, it's holding up pretty well. Look, it's the obvious value play in this sector, and there's not even a close second by a country mile. They produce an enormous amount of cash. They pay a big dividend. They are and will be the largest producer in the world for a very long time. Now, they can ramp up production. Realistically, I think they could ramp to 70, 75 million pounds a year. But of course, that means that they drain their reserves faster. You can look at a profile of their production, and you can see a very rapid decline from here. I'll actually share my screen here if that's okay.
Yeah.
Do you see that?
Yeah.
Okay, so this is the Kazatomprom's kind of production profile going on in the future. You can see that new mine at the very top. That's Budenovsky. It's a monstrous mine, and this is the mine that the Sovereign Wealth Fund of Kazakhstan, which is 75% owner of Kazatomprom, pushed for this new mine to be 49% owned by Russia, which it is. So half of this big peach-colored thing at the top of this mine, half of that production is going to Russia, straight up. And is going to be either remain in Russia for their operations or be sold to Eastern customers. So, but you can see this is a big ramp up they're potentially looking at. This shows they can get to 85 million pounds per year by 2026, roughly. That's going to take a lot of capital investment, a lot, because right now they're right around 60 in the low 60s. And it's going to take robust supply chains that don't have any problems. Sulfuric acid, it's going to take a ramping up in labor force. Geophysically speaking, it is possible, but you can see how quickly it's a few years of production at that heightened level before it just absolutely goes down a waterfall. Yeah, so yeah. If they ramp up production, then the decline happens sooner. With all of that said, there's a lot of hair on this story, and it doesn't look like things are moving in a non-bifurcated direction. It looks like they're moving towards a solidification of bifurcation. And I think that this most recent mine development with Budenovsky and 49% of that going to Russia doesn't look great for the company that's listed in London. And, you know, generally speaking, I'm not even stating my own personal opinions on what's going on over there, but the West believes that Russia should be cut off. And I think if things continue to intensify as they have been, especially if Russia officially declares war, then the CSTO countries are obligated to support Russia, and that's Kazakhstan. That's one of the countries within that organization. So, you know, just don't put all your eggs in that basket. If you want exposure to the value play in the sector, go for it. But just understand you're taking a jurisdictional risk, and it's the chance of them being sanctioned, lumped in with Russia. The chance of that happening isn't zero. So just understand that you have that risk in owning it from here on out, unless and until that situation is how can I say it? Until it's cleared up and Kazakhstan is cleared with any association with Russia. But this most recent mine development and half of it going to Russia, that's certainly not moving that direction. So I would just say be cautious about it. Yeah.
Okay. Yeah, this could be another Gazprom or Polymetal or one of those ones that you buy, and the next thing you know, you don't own the shares anymore.
Right. Yeah. And, you know, it's a difficult thing to predict. You just have to look at what is happening. And what is happening is the company specifically has done their best to remain friendly to the West. And I believe that they're going to continue to do that. I don't think they want to lose business from Europe. And, you know, Urano and the French are going to keep buying from Russia and buying from Kazakhstan as they have been. They haven't cut themselves off, even though the rest of Europe and the United States and Canada have voluntarily cut themselves off from new business with Russia. The French supposedly have not, which is interesting. But, you know, yeah. There's just jurisdictional risk there. So we have to just look at what is happening, not try to look at the magic 8 ball. And what is happening is their most recent gigantic mine development. Half of that's going to Russia. And the Sovereign Wealth Fund, that's a majority shareholder, pushed for that. That did happen. And a bunch of the C-suite bailed when that happened. So, you know, I don't know what to make of that other than just, you know, there's risk there.
Yeah. France is kind of playing an interesting hand right now because Total recently sold oil and gas in yuan, and it's like, that's an interesting play. Okay, from Skylight, thank you very much for this opportunity. I wonder what the outlook of the current contracts from Cameco, which are currently being concluded until 2040, have on the price development of uranium. Can you classify that better for me?
With the current contracts, the recent contracts with Cameco, what's the influence on the price?
On the price development. Yeah, influence on
price development. So in my opinion, Cameco, there's a couple layers to this. One is that Cameco's big contracts this year with Eastern European utilities, and that's new. So these utilities in Ukraine, in Belarus, historically speaking, have secured uranium conversion, enrichment, fuel fabrication, all from Russia. And so this is new for a major Western producer to be providing uranium conversion, fuel fabrication to these utilities for a very, very long-term period. So that doesn't answer the question with regards to price, but I'm getting there. So basically what that means is the bulk of the utilities that exist in the world, the bulk of the nuclear capacity in the world is in the West. It's in the OECD countries. And those entities, although they have secured, for example, in 2021, US utilities secured more uranium from Kazakhstan than they ever have for the year 2021. But generally speaking, the Western producers are friendly to the Western consumers, and Cameco is kind of the first place you're going to go if you're looking for Western source pounds especially if you're in North America, right?
Yeah.
So these Western customers, which also, by the way, are the least covered in their forward requirements of all of the utilities, especially in the United States, they've got less than 2 years of inventory on average. They look to Cameco, and if they're looking at Cameco and they say, oh gosh, the next 5 years of their production is fully committed into contracts, and they just signed, what is it, 60, even if we exclude Zaporizhzhia, 55 to 65, my math is rough, but let's just say 60, 65 million pounds of uranium going to Eastern Europe, a new customer, that definitely catches their attention. So that's one part of it, is that the largest Western producer, I would say, up there with Urano, and then of course just behind Kazakhstan, which is kind of stuck between the West and the East, but is leaning more towards the East, is tying up a lot of their forward production in contracts, generally speaking, and a good chunk of that is with new Eastern European customers. So that's the one big part. The second big part is that Cameco also, along with Urano, along with Kazatomprom, along with Navoy from Uzbekistan, the Chinese entities, these are the big players in uranium production. And the fact that Cameco is signing so much uranium into contracts already is kicking off the uranium term contracting cycle. And it's quickly showing that tier one production is being consumed into contracts. So those big players I just mentioned, that's tier one production, and BHP also, but because it's a byproduct of their gold and copper production, they're not really necessarily seen as kind of a primary player, though they are, right? They're producing about as much as the Uzbeks are. And the Uzbeks, they've got offtakes with traders, but they also contract a bit. Then Urano has their JVs with Cameco in Saskatchewan. They've got a JV in Kazakhstan, the Inkai mine, which is a big mine. And they're developing ISR projects in Mongolia. They're looking at, they were looking at developing Imaururen in Niger, but I think they are holding off on that. We'll have to see what they do there. They've also got some more potential production in Saskatchewan with Sabre mining, with a variety of projects up there. So they're a big producer. Uranium One also, and their primary production comes from Kazakhstan, but Uranium One's kind of off the table currently with the West. All of this is to say, tier one production from these entities is being consumed by contracts very quickly. And when that capacity is mostly contracted, like to capacity from these producers, then we kind of bump into the next level of contracts. And so the greenfield producers and the brownfield restarts are going to sign a small number of contracts that have the buyers have a little bit of leverage because there's a little bit of risk still in developing those projects, right? So, and what does that leverage look like? Usually that looks like majority, if not entirely, fixed price contracts with base escalated. So you'll sign a fixed contract. For example, let's say Paladin might sign a fixed contract at $65 uranium. but they'll have a base escalated based on inflation expectations, right? So each year of delivery for that contract will be a slightly higher price. But once those projects are de-risked enough, either with committed contracts or with actual production, then we start to get into these next level of production price level. And that's going to be probably north of 70, $75 a pound and potentially higher. And of course, that doesn't even take into account, financial players in the spot market, the thin spot market and all of that. And that's not related to this person's question. But the big things are tier one production being consumed relatively quickly means we were going to work through what's available at these prices, let's say, faster. And then Cameco doing business with Eastern Europe, which is new. So those two things, I think, are kind of shaking up the term market, and the price is going higher. I mean, that's what's going to happen.
Yeah. Okay.
Kind of a meandering answer, but hopefully that helped.
Yeah, it did. I didn't know about Cameco securing a contract with Eastern Europe. That's interesting. That's interesting. Yeah. Okay, from Frank. What is the short report of UEC?
Oh gosh, what was that?
Remember, we had that spike down in Uranium Energy Corporation, and I as I understood it, this was simply a short position where a guy wanted to make some quick money, and
basically, this is a classic tactic across. It's not unique to uranium. It's not even unique to resource stocks, but an analyst, let's say, will take a chunky short position, then put out a piece that bashes the company in order to talk their book and push the price down and cash in on that investment. That's basically it. They made some.
Nothing fundamental happened with the company. This was just
absolutely nothing happened with the company. They just highlighted some critiques of the company. And you could argue that some of their critiques were fair, and maybe some of them were a little bit dirty. But every company's got good and bad things about it. So it really had nothing to do with the company itself. It had everything to do with this short report in order to basically talk their book. Yeah.
Okay. All right. From Awful Thoughts. What limitation will there be to U3O8 demand if conversion capacity in the West is fully booked?
That's a very interesting question because it is fully booked. So at least for the short term and even into the midterm. So most conversion capacity, ConverDyn was supposed to come online 10 days ago. So it's basically any day now. Their initial production is going to be about 7,000 to 8,000 tons per year. They can ramp to 12 with less than 100 million in capex, but that'll obviously take some time, and it will take more contractual commitments and interest from utilities. But their 7,000 to 8,000 tons per year capacity is booked until 2027. So for the next 4 years, I think in 2027 they have a little bit of capacity, maybe 500 tons. 2028 a bit more, 2029 a bit more. And it's about the same for Comurex in France and for Port Hope and Cameco. Both Comurex at the Philippe Cost plant in France and Port Hope in Canada, they've got a bit more capacity they can fill. So capacity for spot conversion is pretty much full. However, some of the biggest term conversion contracts are held by Western enrichers. And so you might say, oh, okay, this capacity is absolutely full. There's not going to be any spot conversion available. There's no UF6. Everybody knows there's no UF6 on the market. So what the hell are these enrichers going to be able to do? Yeah, they're bumping up their tails to 0.25 operational. Where are they going to find the UF6? Well, A, they've already bought some. B, they're conversion customers. So they're uranium buyers. The enrichers are buying uranium. Of course, having full capacity booked in conversion will ultimately limit the uranium that can be purchased and ran through the system. But the fact that the enrichers are some of the largest customers of that conversion goes to show you that they are overfeeding and they will be overfeeding. So utilities, and this is part of, the second part of the answer would be that utilities by nature sit on relatively large inventories, right? So you've got European utilities that are usually north of 3 years of inventory. The US is historically less, and currently historically relatively low as well. But they've got a slight buffer because of inventories. And when you go and you look at their uncovered requirements, that really drops off when you go out 3, 4, 5 years. So the utilities that are not covered, let's say in 2027, 2028, there's still term conversion contractual capacity available in the West during those timeframes for which they need to be filled. So if they go to Urenco and they sign an enrichment contract starting in 2029, and they sign that at 0.32 tails, then they can secure that conversion capacity as well. And I would argue if they're going to sign that enrichment contract, they probably already have line of sight, if not a conversion contract in place. So when you're going out on the forward curve for which the time period exists where they are really uncovered, there's capacity there. And that capacity will allow them to buy that bump up, that larger amount of uranium based on those higher enrichment tails in those contracts. So is it a bottleneck? Yes. Is it a bottleneck to the point where it means zero increase in uranium demand due to the higher tails? No. And you also have to look at other evidence. So it's not just my opinion on this. Are Western enrichers raising their transactional and operational tails? Yes. Are they going to do that if there's no conversion capacity to UF6? No, they're not going to do that. Like they can't bump that up unless they have the material to feed through that, because they're not going to under deliver on their contractual obligations for EUP. So if there's evidence, which there is, that Orano and Urenco have been raising their operational tails assays into the mid 0.2s, check. If they're raising their enrichment tails assays for contracts going forward that are 5+ years out in the future into 0.3 and higher, check. That means these enrichers know that there's conversion capacity sufficient to fill those tails. The other part of that is that enrichers are, in some cases, signing enrichment contracts into the 0.3s for enrichment contracts that are to be delivered on in the later part of the decade, not because necessarily they plan to be operating in the 0.3s at that time, but because that means the obligation is passed to the utility to deliver the feed into those higher tails assays contracts. And if they're signing at 0.32 and at the time that they end up enriching for that contract, they can run at 0.28, then they're underfeeding again. And that helps to make up for what they're having to do now, which is if they're overfeeding in real time with their operational tails assays, then they are the buyers of uranium. They have to eat that. And the way they eat that is twofold. They raise the price of SWU, check, and they sign new contracts at higher tails assays than they expect to be operating at, so that the utilities have to deliver more feed into those contracts and they can sort of borrow from Peter to pay Paul. Yeah.
The underfeeding and overfeeding goes into like what you were talking about, I think the last time we were on with the lemons, and putting a whole bunch of lemons through really quick, or trying to get every last drop out of each one that you can, right?
Yep. Those higher tails assays just means that there's more U-235 left over in the tails, which essentially means they run through that process of turning natural uranium into enriched uranium. It happens faster. There's more good stuff in the tails, but it means they need more feedstock in order to do that. Yeah, exactly.
Yeah. Okay. From Fahad, if there are sanctions, how can utilities secure supply in the near future? So I think he's talking about the West.
He's probably specifically talking about the US. There is a couple of choice utilities that would be basically caught short if EUP were cut off entirely.
We are going to break this into 2 parts. So hit the subscribe, the little bell notification icon, then you'll be notified when part 2 with Justin Huhn comes out. In part 2, we discuss conversion of uranium in China. And we also talk about the ban on Russian uranium in the West. And we ask Justin the age-old question, when moon? Or, as the Mexicanos would say, cuando luna? Thank you for watching. Hit the like, and we will talk to you in part 2 with Justin Huhn.